Hello and welcome to the week ahead video. Quite a few things to brief you on here the next 5 trading sessions. It's a relatively busy week but should get off to a slow start given the UK May bank holidays on Monday, keeping all UK products and a number of traders away from the market. So it's been a quiet start to the week, but unrest has spread further, unfortunately, in the Eastern European country of Ukraine, as 31 fatalities are reported across the country as the civil unrest spreads to Odessa in southwestern Ukraine. As we came into the office this morning on Monday, further Kiev-led special forces anti-terrorist operations were being conducted in Slavyansk in eastern Ukraine, potentially hinting that the bloodshed in the country is far from over. This is despite Russia's reiteration that they look to protect Russian interests in the interests of democracy in the country itself. There has been no further international mobilisation of the military as yet, but that's something that markets do still remain wary of. Elsewhere this week, though, on Thursday, we get the much-awaited ECB rate decision. Analysts do currently expect no change from Draghi and his board, with June seen as the more opportune time at which the ECB could take action to stem the disinflationary pressures we've observed in the euro area. So the latest source comments out of El País in Spanish press, they did cite that the ECB would use conventional monetary policy first, that would take the form of rate cut and a potential negative deposit rate, before moving on to potential unconventional monetary policy measures, the likes of asset purchases, which could wait until after the asset quality review in autumn for the Eurozone banking sector is over. As such, those looking for any action from the ECB this Thursday could be disappointed, as the euro does still remain close to those multi-year highs. Elsewhere this week, though, we do have data out of China. We have CPI and PPI, which should continue to indicate a consumer spending-led slowdown in the country itself. We had a pretty rocky Q1, with GDP numbers coming in below expectations and marking some of the slowest rates of growth for a number of years for the Chinese economy. So both CPI and PPI expected to come in lower than their previous figures. Earnings season does continue this week, slightly slower out of the US, but picks up in the UK, with Barclays due this week after RBS's much better than expected report we saw last Friday, where their shares closed up over 8%. Of course, we'll bring you all those releases as soon as they hit the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic week.